All right, now I'd like to welcome to the show Nicholas Anthony, a policy analyst with the Cato Institute and co-author of the recent study, Central Bank Digital Currency, Assessing the Risks, Dispelling the Myths. Welcome to Free the Economy, Nick.
Thank you so much. It's great to be on.
So, today we're talking about digital currencies, in particular, the possibility of a future digital currency issued by the US government, a so-called central bank digital currency, or CBDC. Uh, not to be confused with that stuff you buy at the cannabis dispensary, CBD. Now, to start with, a lot of us are familiar with sort of digital dollars in the sense that we use things like Cash App and Apple Pay and do online banking, right? And none of those require us to take green pieces of paper and give them to someone. So those sort of like digital dollar management, how is that different from what we're talking about here, which would be the government issuing digital dollars?
Well, that's really one of the big problems here is that in some ways they're not that different. So we're using prepaid cards today, debit cards today, credit cards, and payment apps, like you mentioned. And for most people, as far as they're concerned, those are very much digital dollars. The key distinction, though, is that those are liabilities of private companies that are issuing it, whether it be PayPal, MasterCard, or the like. Those are private companies that are responsible for maintaining and transferring the funds. And with a CBDC or a central bank digital currency, all of a sudden that liability status goes to the federal government or it goes to the central bank. And they're the ones that are in charge of maintaining your account and moving funds around and being responsible for having that control. And it's a little weird, I must say, to look at it because on one hand, it's not an innovation to have digital money. It's not a big change. But on the other hand, what might look like a very small change can have vast implications. Implications I'm sure we'll get into, but just briefly, uh, for how money operates and how the government is involved in our lives.
Yeah, so it's a sort of a matter about what's the relationship here. So the relationship between, if I have a bank account, it's between me and Truist or Wells Fargo or Bank of America, whereas if we're using sort of the central bank digital currency, the relationship between me and the federal government. I know there have been some people who've had issues with bank customer service with Bank of America and Wells Fargo in the past, but it's probably better than the customer service you get from the U.S. federal government if you've ever had to pursue any customer service related inquiries with the IRS or other federal agencies. They're not known for being especially responsive, and they also don't need to compete for uh, your customer service status, right? So they don't have the same incentive to try and resolve disputes that sometimes private companies do. So the other analogy here that the things that people might already be familiar with is so we already know we covered how you transfer money via something like a cash app or a bank account, but what about a digital currency issued by the government? How would that be issued or how would that be different from uh something like non-dollar currencies like cryptocurrency like Bitcoin or Ethereum or all those other coins?
That is such a good question because unfortunately, I see people not wondering how they're really different and making the mistake of thinking that they're one and the same, that Bitcoin and a CBDC is exactly the same thing. And they really couldn't be more different. They're polar opposites in a way. So, without getting too into the weeds, there some basic differences are where Bitcoin is maintained through a decentralized system with people around the globe that are free to enter as they please. You just need to have the right technology, being a computer or a mining rig or the like. A CBDC is centralized around the government, and the government controls who's able to access it, who's able to come on board. And that's most likely going to take the form of you're going to have to submit identification, verify your income, and the like to prove that you can be a part of this system. Another way, because of that kind of control, is that the government gets to say what you can and can't do with it. Whereas with Bitcoin, there isn't that option to have censored transactions. So, really, across all the different characteristics you can line up, they're very much polar opposites. So, while they might fall under the umbrella of digital currency, it's a very unfortunate mistake to see where folks think, well, people like Bitcoin, so they'll probably like CBDCs. It's really not the case.
Well, it's uh, a big technological development like cryptocurrency in general. Different people like it for different reasons. It has different applications. But certainly when it comes to the more kind of like libertarian side people, people who don't want a lot of government intrusion, uh, something like Bitcoin, most of the value proposition for them is that it doesn't involve the government. The whole point of it is that it's not government controlled. So the CBDC would not just be like a more stable version of Bitcoin. It would be almost the opposite of what Bitcoin was supposed to be.
Exactly.
So now, obviously, the people who are proponent, we're both pretty much skeptics. Pretty should be pretty clear. But there's certainly plenty of people who are proponents of central bank digital currencies, and they have various arguments for why they think creating it would be a good idea. But I wonder what even the steel man case for why they think it's a good idea. What advantages are they saying it would have? Like how much better, how much upside are they supposedly predicting? Uh, you know, because already, I mean, we have a pretty, certainly compared to peer countries, we have a pretty efficient, we have a pretty inclusive, a pretty low fraud financial and payment system. So are they is the CBDC like fixing a problem that doesn't exist, or the pro CBDCers are they predicting that we would see some giant, huge advantage from it?
I'll say to play nice at first. Proponents have very much promised the world with CBDCs, and most of the things that they promise sound quite nice. They promise things like financial inclusion, faster payments, a stronger dollar, better monetary policy. Um, these are all things that I'd like to see. I'd like to see more people involved in the financial system and a stronger dollar. The problem, though, is none of these things are really unique uniquely solved by a CBDC or solved at all by a CBDC. And this was something that Norbert Michel and I wrote about in a report on CBDCs, the one you mentioned earlier, where once we kind of peered behind the curtain and started to look like what is this actually going to offer and what are these problems fundamentally, none of them were solved by a CBDC. And if there was some sort of benefit to behold, it was already something being solved in the private sector. A perfect example is that of faster payments, because just this year, the Federal Reserve launched FedNow to address that. And I think it's about 5 years ago now, or maybe 6 years ago now, the real time payment system, or apologies, the real time payments network was launched by the private sector to address faster payments. So there you have solutions on both sides of the fence. And so it's really, I mean, we see it time and time again. People describe CBDCs as a solution in search of a problem. And I think that's a accurate description.
Well, yeah, and one of these some sort of subcategories here is the so-called inclusiveness, and one of the ways people have measured this in the past is the percentage of Americans that have a checking account. And so the idea is that, well, maybe 50 years ago, not everyone needed a checking account, but today it's so important and it's difficult to navigate a lot of financial transactions unless you have one. So that should be like the bare minimum we should expect. So we need absolutely everyone to have a bank account, and that or the equivalent of that supposedly would be helped by policies like this. But we've already been seeing, like as you've said, we've had sort of the trends already going in the right way. by private financial actors and products. Um, we've got a very small percentage, really, of Americans that don't have a checking account. Um, so that problem is sort of already being solved. But one of the things that was interesting in your paper was the reasons why is there still this whatever 4 or 5%, however many it is, that don't have checking accounts, and it's not because they can't get one. What is it people usually
Exactly.
say when you ask them?
Most of the time, people are saying that there's three top reasons. These have held steady for quite a while now, where they either uh, can't afford the minimum requirements, they have concerns about privacy, or they can't trust the banks. And it's really important across not just CBDCs, but across all policy areas. It's really important that if you see a problem, you stop to ask why people are facing that problem. Because what we learned from those three examples is that a CBDC is not a solution. Just starting from the bottom up, if you don't trust the banks, you probably don't trust the federal government. That's an unfortunate reality for some officials to confront, but it is reality. We can see from surveys over the years that trust in the government is at historic lows. And also, when the Cato Institute surveyed the American public earlier this year, the vast majority said that they trust the private sector to handle their money over the government. So trust is already a big barrier, but then privacy comes into the mix. And if you want to preserve your privacy, the answer is probably not to have an account with the government, because the government's going to have the same requirements where you have to submit your ID, prove your income, and the like that the banks are asking, because the banks are asking it because the government made them do it in the first place. So those two are already building up quite a substantial wall. And then when you get to the question of the minimum requirements, well, there's a couple problems here where one, you don't really need a CBDC to subsidize bank accounts if you want to just remove those requirements and fees.
Mhm.
But also, more fundamentally, if you give people access to a no minimum, no fee account at the Federal Reserve for a retail CBDC, that's not really giving them a bank account. That's not giving these people access to uh, interest payments on a savings account, to loans or lines of credit, or to other financial services. You're really just giving them a prepaid card with extra identity verification. And so, even if you get past, you ignore the trust factor, you ignore the privacy factor, and you subsidize these accounts to get around the minimum balances, these these folks aren't any more banked than they were beforehand. We've just kind of danced around the terminology uh, to get really nowhere fast. And that's why this is really a perfect example of it is a good intention to want to help people and give them a leg up and get them more involved in the economy, but this is not the way to do it.
Well, I know you hit on something I was planning on leading into here, which is that uh, banks already have a lot of sort of invasive questions for bank customers and ask them a lot of information, which has driven some of people out of wanting to have a checking account in the first place. But the only reason why those things happen is because those are government mandates and requirements. Um, so we already have significantly less financial privacy than we would have had, say, 25 years ago, because of government intervention, and therefore it seems, as we said, a little ironic to say that a digital currency completely controlled by the U.S. federal government is the solution to those things. Um, what would be the solution to that? I mean, this is when it comes to things like what they call know your customer rules and anti, money laundering um, regulations. that have been put into place. We're in sort of like the TSA Patriot Act conundrum here, right? So we have a policy that almost everyone agrees is not great. It's expensive, it's clunky, there's overreach here. Uh, a lot of the effort involved is wasted, but no one seems to be brave enough to say, "Well, let's stop doing it then." Right? Because the terrorists are lurking under your couch, and they will jump out the second we stop spending $100 billion on this wasteful program. Or the drug lords from whatever, those terrible evil countries, not the country here where we use the drugs, but the terrible countries where they make the drugs, right? Those drug lords will come and get us if we, repeal any of these like banking regulations. Um, is there this is sort of a side route from the CBDC debate, but is there any sort of like reasonable middle ground where you can say, well, we'll get rid of like the worst overreach of this, but we'll keep whatever we think is absolutely positively necessary?
I think if you want a good middle ground, my colleagues Jennifer Schulp and Norbert Michel have written about this at length, where maybe the best compromise is to look at the current Bank Secrecy Act regime in kind of two pieces. So on one hand, you have banks are recording more information than they used to regarding who you are, what you do, and what you're doing with your money. And on the other hand, they're reporting that information to the government and reporting that in large quantities at a time with a very low threshold for why it's being reported. And one compromise is to just get rid of that second half. So still have banks record information, keep it on hand for X amount of years, and keep it kind of business as usual there, but end this process of constantly reporting millions of transactions to the federal government. In 2022 alone, I believe there was around 26 million reports filed by banks under the Bank Secrecy Act. And so if you can get rid of that half, you're not letting criminals just have their day, because banks can still report when something egregious happens, when something is obvious. It's just you don't have them filing millions of reports on innocent folks who really haven't done anything except for maybe deposited a quote unquote a little too much money after a farmer's market or a garage sale. And so that's one way that if you think the world will end, you can at least cut down. If you think the world will end if you get rid of it all, you can at least cut down on a substantial chunk and maybe rest easy. I do think that the whole thing needs to be reworked top to bottom, but that is a very strong way to compromise it,
Right. So if I've
or to
been out
compromise
there,
on it. Sorry.
right. So if I've been out there money laundering, just laundering up a storm, just all kinds of drug money, um, the FBI can still get a subpoena for my records, and that information would still be there. It just wouldn't
Yeah.
automatically be given to them with no with no probable cause.
And that's really the big difference here that I think is important to kind of stress, is that your information is still all there. It's still available. It's just changing. Is it going to be automatically reported for the bare minimum of what a suspicion is? Or is it going to be reported when an actual crime is taking place and under investigation? It's kind of the difference between having targeted investigations and blanket investigations. And I think we need to get towards a process where it's more targeted and focused.
Well, yeah, speaking of blanket government information about your finances, in addition to financial privacy specifically, you also talk about, in this paper, the threat to financial freedom in general. So, you had some interesting phrasing there where you said that, the government could use a CBDC to exert control over financial transactions that would be preemptive, such as prohibiting and limiting purchases, behavioral, spurring or curbing purchases, or punitive, freezing and seizing funds. from your sort of CBDC account. So that sounds pretty intrusive. And so, in the future, you can imagine this scenario where uh, one, it's shady for, in my opinion, for the government to have this much power, even potential power, even if we were going to say, oh, well, the government would never abuse this power. Of course not. But obviously, if a big percentage of Americans are using CBDC dollars and it's all centrally controlled, then there's always the possibility that there could be abusive intervention there. Um, but I could readily imagine a future in which, the government decides, oh, we're going to have an all of government policy on healthy eating, right? Like right now we have the Biden administration has officially announced we have an all of government policy on like DEI and equity in policy making, and then we have an all of government approach to global warming and combating climate change. But so imagine we have an all of government approach to healthy eating and nutrition in the future. So imagine you go and you try to order a meat lovers pizza with your CBDC digital dollars, and then you get a little announcement that says, well, the Centers for Disease Control has realized that you've been eating too much saturated fat, so we're going to block your digital dollars, and you can't use them to buy the meat lovers pizza. If you want to go down the street to Sweetgreen, knock yourself out. Your digital dollars will be free and unchecked. Um, what do you think about that kind of non-delicious dystopian future?
I think it's something that it's it's a very frustrating piece of the CBDC policy conversation because it sounds so dystopian and almost a wild conspiracy theory out of a novel. And yet this is actually a real conversation that we need to have that is firmly rooted in US history, in the policies that we've seen in the not too distant history. The prime example I think of is with the experience with Operation Choke Point, where certain industries were targeted because they were politically disfavored, and being industries like gun shops, pawn shops, cannabis dispensaries, and the like. And that was all done in the traditional financial system
By agents of the federal government.
by agents of the federal government, yes. And that was all done with a pretty loose system, but an effective one. Now we're talking about a system that opens the doors to have the government directly tied to your financial activity and to have a direct view on what's going on with your life. So whether it's limiting foods, limiting certain other purchases, like whether it's through an environmental concern or concerns about whatever the policy of the day is with
You only
other
get
social concerns.
you only get 100 rounds of ammo a month, max.
Exactly. It's really unfortunate how far the options go. And to be crystal clear here, this is a concern that people should have on both sides of the aisle, because for Republicans, when Democrats are in charge, it might be that gun shops are targeted. And for Democrats, when Republicans are in charge, it might be labor unions or social causes are targeted. It can go either way and very quickly. And it's something that I don't think enough people have fully grappled with yet, that these are options we just should not have the government have at large. Because even if it's enacted with the best of intentions, it only takes one crisis, one viral news story, one unfortunate event to suddenly have folks thinking, well, we do have these abilities. Maybe we should actually act with these.
Well, yeah, and in the case with Operation Choke Point under the Obama administration, you had, the Department of Treasury and the Office of the Comptroller of Currency. There was like bank regulators, leaning on banks, saying so it was, they went to the banks and said, oh, well, you've got these small business clients that are pretty shady. It might be better for you if you just drop them as clients and cancel all their accounts, right? So that was like going down to the small business level, which is already not great enough. But this would be like going down to the individual customer level and saying, oh, well, you shouldn't buy these things in the first place. And of course, they could do the same thing to the, intermediate, like they could also freeze the accounts of small businesses if the small businesses were transacting in, central bank digital dollars. Um, and the the point you made about this, flip-flopping of partisan control every 4 or 8 years, I think it perhaps is underappreciated, right? We already have a Supreme Court case about a state trying to make hormonal birth control illegal, right? Like this is not a sort of far off crazy conspiracy theory. Like this is literally already something that's happening right now. And do we want to go back and forth where, one during one administration, well, buying and selling guns is de facto illegal because we can't use digital laws for that, and then birth control is illegal, and then it's you can't you can't donate money to a conservative church, and then estrogen hormone supplement therapy is illegal, just depending on who happens to be president, at any given time, or what the majority of the Supreme Court is. Um, it seems like, as you said, but maybe both sides could call, or both, ends of the political spectrum could call for a bit of a ceasefire on implementing policies that would make this even possible. Um, because I think the logic of this is that it sort of accelerates every time. It's not just that it flip flops, which is bad enough. But it's like, well, you guys made our stuff illegal, so we're really gonna go after you next time, when we get into power. And so it would, like as you said, I think it would behoove everyone considering whether or not all of this whole construct is a good idea to sort of think one or two steps down, down the political path and imagine what might happen.
Sadly, I think we've already seen with current and recent Congresses that retaliatory politics are a very real thing. And I think you're exactly right that it just takes one opening salvo to then put us in this downward spiral of every 4 years, things get worse in a new way. And this is a way that there are some buffers with current politics where they don't quite affect us so directly. But this creates a sort of tether between individuals and the federal government. And that's not something that we want to have.
So what's the solution? Can we get Congress to just pass a law that says don't do this? Just don't do it.
I think that is the best path forward, is to have a law that specifically says the Federal Reserve does not have the authority to push forward on its own. Leave it there. The Federal Reserve does not have authority to do this. The Treasury does not have authority to do this. And if somehow there becomes a safe way to go about it, Congress can change its mind in the future. But until then, these agencies cannot act on their own accord like they have so often in the past. I do give credit for there are folks out there that are trying to set up uh, ways that CBDCs are a little less bad. But if the option is between something that is a little less bad and something really bad, I'd rather neither of them. It's just not that much of an innovation. And that's something that is really important to stress, actually, is that with all the problems that CBDCs present to financial privacy, financial freedom, the larger economy, and even the legitimacy of central banks, even if you could fix all of those issues, make it so somehow it doesn't have to comply with the Bank Secrecy Act, so it can be anonymous, and somehow it offers real benefits on this front, you still have to grapple with what exactly do we need it for? What exactly is the private sector not doing that is a sizable market failure? And I'm just not seeing that. So even if you can get rid of all the risks, we've still yet to even see a benefit for it. So I'd much rather see Congress just say this is not an option. Only Congress has the authority to green light it. And at this moment, it is a firm red light.
All right. Well, I'll sign on as co-sponsor of that bill. All right, Nick. Well, thank you so much. This has been a great conversation. Before we go, tell everyone where they can find you on the internet.
You can find me at cato.org. Just search Nicholas Anthony on cato.org, or on X or Twitter at Econ with Nick. Those are probably the best places to find everything I'm up to.
All right. Excellent. Thanks for being with us, Nick.
Thank you for having me.